Well, welcome back to another edition of Commodity Chat from Trader PhD. I'm Head of Market Content Dawson Schmidt. Joining me again for this week's discussion is Ag Market Advisor Nick Lawrence.
Hello.
Well, Nick, quite a few headlines to kind of get through today. I mean, the biggest news, of course, is looking at some potential rumors that China was going to be stepping in with some more U.S. soybean purchases. Basically, yesterday we got a big jump on the morning session open on the news that China could step in with more U.S. soybean purchases. Now, there was unconfirmed talk that China's state supplier, Sinograin, potentially bidding for U.S. soybeans, though no sales were confirmed. It was worth noting that the USDA did come in this morning with saying that exporters did sell 372,000 metric tons of soybeans to unknown buyers in a flash sale, and 312,000 metric tons of that total were for the new marketing year. So a little bit of rumblings going on with things here in the short term, but ultimately we got to get some of these confirmations going over if we're going to believe this news.
Yeah, that's true. If I forget about the news headlines for a minute and I just look at price action, um, you had some bearish news, coming out of last week and then over the weekend and then Monday, market's really inability to trade lower, and then Tuesday, that was followed by that big strong open. So both of those, the early week trade really um, was in line with kind of what Chad has been saying. The market is attempting to put in a low, and boy, I mean, like I said, it really looked like it was trying to, and then really, as of the balance of yesterday and really all day today, for the most part, it's been somewhat consolidating its gains from Monday and Tuesday. So it's going to be really interesting. I guess what I'm trying to say is it's going to be really interesting to see if why I'm bringing this back around to the China news. Was that China headline, a happy accident to kind of help solidify that low? Was that just a spark to kind of get some things moving? A good excuse to run the market higher because it wants to anyway? Or was that just a blip and all this gets faded? I think time will tell. Really watching it like a hawk. Like I said, it's consolidating its gains really yesterday and today, or the balance of yesterday and today. So hopefully it holds, and hopefully we can turn higher.
Yeah, I mean, to go with that, just looking at what China just has on the books right now in terms of new crop U.S. soybean sales is, that's zero right now. Usually they do start buying that new crop a little bit earlier than what we're seeing right now. Last year they bought it really late. And so, maybe they might do the same thing. And I was hearing from other industry sources that, just for the summer already, much of China's soybean needs are covered. So, I mean, it seems like if they do come in with some buying, it wouldn't necessarily be for the new or the current crop year, but it'd probably be for that new crop year. And that's why we kind of been keeping our eyes on that. And so, like total outstanding sales, perspective wise, we're running very slow at a very slow pace compared to the 5 year average specifically. But we're about on pace for the last 2, 3 years, but we're still pretty slow overall.
Well, I think one thing we have to keep in mind, I think part of that, I mean, just basics is, to keep in mind is we never had like the post first of the year like seasonality play out, right, where we come have a post harvest rally, peak out depending on the South American weather market, and then drive back down through late winter, early spring. There was really no um, value window to create a bunch of opportunity to make those sales. Right, we ran up from January all the way through the beginning of March. Took a couple of days off and then just kind of continued to grind higher until this most recent sell off. So I mean, I'm not trying to make excuses for the world import, global importers or whatever for China. I'm just, it hasn't been on sale, you know. And unless that product can go on sale, I think it makes it awfully tough. And then this chart you just pulled up, I think partially depicts that, right? It's just never been on sale.
Yeah, when you look at Brazil, and I mean that's why what's been hurting our exports to, non-China countries too, is that we need to get more competitive with Brazil, but I mean all the supplies that they got that came online just these past few months, yeah, it's going to be hard to compete with that. Wanting to move forward, though, of course, looking at the latest on the Iranian news is that the White House did announce on Sunday that it did reach a deal with Iran to reopen the Strait of Hormuz, move towards ending a 15-week war. So Donald Trump did post on Truth Social on Sunday that the United States had reached an interim deal. And then we got more news that it's going to be more so of a memorandum of understanding that pretty much makes us still extend the ceasefire in terms of just still trying to strike a final deal. So, in that memorandum of understanding, pretty much Iran is agreeing to halt an escalation in the Persian Gulf and maintain limits on its nuclear program, while the U.S. does agree to restore trade, ease sanctions, release frozen assets of Iran's, support economic reconstruction, and work towards that broader final settlement. The big question mark out there is still shipping. So ship owners are still looking to seek clarity on what a reopening will look like. Companies are skeptical, still for as tit for tat missile strikes were coming in. And then again this morning, President Trump was like, if Iran doesn't want to work towards final agreement or we don't like their final agreement, they're going to start bombing them again anyway. So a lots of back and forth in terms of what we do know with what could be signed as of Friday in Switzerland is what's on the docket currently. So a lot of things up in the air in terms of, the shipping and what that means.
Yeah, the skeptic in me says like Iran has done a fantastic job of like, keeping the wolves at bay, agreeing just enough to like quit getting bombed, right? Just kind of doing their time, dragging this out, etc. And the skeptic in me says this is just one other piece to that. They're agreeing to what they need to minimally agree to just keep dragging things out as long as possible. They do know that politically speaking, um, the longer this takes, the better. For them. And so that the skeptic in me says like that's just they're just saying and doing what they need to do, in public and really towards the U.S. just to kind of drag it along. And so yeah, I mean, I think companies are definitely have a right to be skeptical. Um, I think for the longer term, probably just again, my opinion here, maybe not as skeptical like in the shorter term, right? I do think this actually does get stuff moving again. How long does it take to clear mines? How long does it take to to actually get things through? All those logistical type stuff. But um, I think longer term, I think Iran's just playing the long game. But I hope I'm wrong.
Yeah, I mean, the as far as earlier this week when the news was announced, the thing that hasn't changed was, and we've heard this tune before. To your point, Iran saying just the right things, and the back and forth of saying, ships can transit the strait, but ultimately, when you look at this graph here, specifically on the fertilizer side, nothing is really even moving through the strait yet. And I thought it was funny too because I took a screenshot on Bloomberg of all the vessels that were around the strait, and you can see some ships were like kind of hugging the sides of different countries, if whether it's the UAE or in the Gulf of Oman. But this screenshot looks like the exact same as it did in the beginning of April when I last took one and we were showing it on the podcast. And so, yeah, really nothing has changed. And you'll look at the fertilizer side, you know, 40 vessels are still laden with fertilizer in the Strait. That's according to data from Bloomberg and Kepler. And, ships that are trapped are still carrying about 100 million tons of nitrogen fertilizer. And what I've been hearing is that once the Strait does even open, oil is going to get the first priority. LNG is going to get the first priority. Fertilizer for, getting these to major crop growing regions, that's going to take last priority. And then Mosaic even yesterday came out saying that, sulfur shipments, which is used for potash, or not potash, excuse me, phosphate production, it's going to take months at least to return to what they might call as normal, even.
Yeah, I think yeah, it's going to take it. I think quite some time. That's what I was alluding to earlier. It's going to take it quite some time for things to move, and all the ships can't show up at the same place at once anyway. And
Mhm.
yeah, it's going to be a mess, man.
Yeah. I mean, fertilizer prices, of course, to pay a little bit of services to what has been happening, wholesale nitrogen prices have been taking a little bit of a decline here. Then I got this year retail fertilizer price chart specifically for Iowa, and we have seen a little bit of a back off on the nitrogen side of things. Of course, potash and MAP are following their own fundamentals, and so they're kind of still on the firmer side, but the nitrogens have been backing off a little bit and kind of just in time for that, seasonal decline that we typically get moving through the summer anyway.
Yeah, it's nice to see that seasonally it is taking a step back. I mean, obviously, I think it's classic supply and demand. So hopefully, take a nice little step back here and give us an opportunity, or give the producers out there an opportunity to have a more classic, summer fill prepaid season type of a deal, to get ready for next year. So now hopefully we can keep easing, and hopefully the commercials did what they had to do to kind of keep everybody around the globe going, and hopefully those ships can get moving again.
Yeah, for sure. Wanted to move on though. Not not Friday, but Thursday, the USDA will release its June cattle on feed report. Kind of ahead of that report, May placements are expected to be at 1.77 million head, and that would be down 6% year over year. Kind of quite the wide range of analyst estimates for this one. I mean, the smallest analyst estimate is expecting an 11% decline. The highest estimate is expecting a 4% increase. And so we have a wide range here. Chances are we're probably going to land within that estimate just because it's so wide. But the survey average is looking at a 6% decrease. Meanwhile, the June 1 cattle inventory number is expected to be 2.5% higher still at 11.7 million head. And so kind of going to be interesting to see what this month's report comes out to, just because, last month we did get a little bit of that, what you could call a bear surprise, just because we were higher than
Yeah,
expected on the inventory and placement side of things.
and that's what I was going to say. I mean, I think the market, it got fooled last month. It got surprised last month, and so I think it's natural to see some of those estimates just widen out, because now you're going to have guys try not to get fooled, right? So the high to low gets widened just a little bit, just because naturally there's going to be guys on the end that push us out a little bit, because they'll be damned if they get surprised again or whatever. So I think it's kind of natural to see that.
I mean, all in all, cash prices have remained, pretty close to their all-time highs. Like the 5 area weighted average index, we've stayed around that 250 to 260 level ever since coming down from that record of, I believe, about 264 on the 5 area. So, I mean, cash prices have largely been holding steady here. So it still seems like there's been good demand for cattle, as, consumers have not really waned away from wanting beef, despite I think the retail prices hit another record in April, according to the Bureau of Labor Statistics. So, I mean, it still seems like the demand side of the equation is still pretty good on the consumers.
Yeah, the cash side of things has definitely stood in there. That's not going away. Probably not gonna, for the most part, go anywhere. And then I so obviously now it's all about screwworm, and does it actually drive that cash demand even higher? I think the market has gotten comfortable with the consumer perception isn't as bad as once thought. The consumer perception, I think for the most part, is okay with the idea of still consuming beef. That screwworm's not going to hurt them. And so now the market is completely focused on, um, the screwworm restrict trade domestically within our borders, and then obviously, does it reduce our already tight inventory? So that's what the market I think is pricing in now, and that's the headline risk, right? Um, does this grow, spread, etc., and make our cattle situation even worse? And so that's why it's been bullish. It's been supportive, and yeah, again, just given our cash situation, and no real worry that the consumer is just gonna stop eating beef because of it. We've got some pretty positive prices.
Yeah. Last thing here, though, heavy rains are expected to hit the Midwest and Gulf regions. Government forecasts are calling for heavier rainfall across Missouri, Illinois, Indiana, and parts of the Delta pretty much today through next week. Storm Prediction Center does expect severe storms to hit the eastern Corn Belt later today, which is right now as we speak of, like just as the afternoon began here in the Midwest, with a mix of flash flooding, high winds, and possible tornadoes. And so, yeah, you look at this graphic here, and we got some heavy rainfall totals coming for a large portion of the U.S. here for the short term.
Yeah, a lot of this is coming kind of today, right, or the next couple, between today and tomorrow. Those types of things. So yeah, it's wet. It's going to continue to stay wet. Have finally, there are some complaints, and I actually did see some bean stress this past weekend when I was out driving across the countryside. You can just tell. Um, extremely wet feet on those beans, and I saw a little bit of stress through some lower areas, but to the lower portion of the map there through the delta. Personally, I think that's why crude or cotton has disconnected itself a little bit from crude. There's a little bit of a, I wouldn't know, I don't know if I call it a full on short squeeze going on in cotton. I mean, maybe after today, it's been a little bit of a squeeze. Um, but I think cotton might actually be in a uh, too much rain weather market potentially, right? There's flood warnings going through a lot of cotton country. Yeah, there you go. You got right there. Through again a lot of production area, and so I'm wondering if that's really what's gotten into the cotton market, and it's decoupled a little bit from some of our other commodities.
Yeah, I mean, you look back at the soil moisture map, and there's a good stretch of the Midwest and Eastern Corn Belt that's looking pretty good on moisture. So it's like, this latest rainfall that's going through probably is not really needed. Look at Northwest Iowa; they're getting pretty dry. I've been hearing a few reports from guys that have been saying that they could really use some rain, especially in Western Iowa up to Northwest Iowa. So there's definitely some holes to fill, and the forecast that we just showed is not necessarily filling those holes yet. I mean, there's some heavier rainfall totals coming to Nebraska, but you look at that northwest corner of Iowa, still only an inch, which they need more than that, and that southeast corner of South Dakota kind of experience the same thing. So definitely some holes to get to, but you look at the South, they definitely don't need the rain like right now. I know they can get dry pretty quickly, but after a lot that the amount that they've just had, I think probably looking at a little bit of excessive moisture here for the short term. Well, any other comments that you want to bring forward? I know we talked about quite a lot just in terms of, again, those potential Chinese purchases just kind of spooking things up here. And then, so far escalations in the war are not really doing a whole lot. Just is it kind of like we're in wait and see moment again for a lot of these commodity markets in terms of, Friday, we're going to see if the US signs this deal with Iran, and then, next week if we get some more soybean purchases.
Yeah, so I would say the big, like, more macro, the biggest thing top of mind for myself is um, interest rates, dollar, and crude, right? Those three big things, are really, the driving undercurrent for, all these other more specific commodities. So, you've seen a large pullback, obviously in crude price, trading at 76 right now, well off the highs of 105. You've got a little bit of um, uh, maybe the beginning of a little bit of a pullback from um, year long highs in the dollar. Does it start to work a little bit lower and help us from an exporting standpoint? And then lastly, you've got a little bit of a leadership change, in case you haven't heard, in the Fed, right? And so, what does that, if anything, what does that mean for, their dual mandate as far as, the overnight exchange rate and full employment, those types of things. Obviously, that matters to us. So, a little bit of a tide change there on a couple of those things. Some supportive, some not so supportive, and yeah, I would say those are the big picture things that I'm watching. No real, I guess, details or insight on any of that, I guess, per se. If energy does continue to break, may not be the most supportive thing, right, in the short term for our commodities. But if the dollar falls and interest rates fall, that can kind of be offsetting help too. So lots of things to watch on the macro level. Um, I would say that's about the only other thing we haven't talked about that I'm watching.
All right. Yeah, like you said, lots to look forward to and see kind of how things progress here as we move through the summer. Again, with how the moisture wraps up too, and how the export program continues to shape up here for the upcoming seasons. But I think we'll end it right there for this week's discussion. And as always, I'm Dawson Schmidt,
And I'm Nick Lawrence.
and this has been Commodity Chat from Trader PhD.